Gold is booming again, but not for the reasons you might think. The headlines are focused on inflation or politics, but many investors are quietly moving money into gold for a very specific reason. In this video, I'm going to break down what's really driving the price of gold, what does this mean for the economy, and what could this mean for you and your investments. Historically, gold has been a horrible investment. On this chart right here, gold is the blue line and stocks are the red line, and you can see that historically, stocks have really outperformed gold. But recently, that's changed. If we look at more recent history, in 2025, gold prices have begun outpacing the stock market. Here's why that's so interesting. When you invest in stocks, you're investing in a business that's working to produce value. Like if I invest in Amazon, Amazon is working to improve how fast they can deliver groceries to my door. They have Amazon Web Services and all these other things that are working to produce a profit. So I'm investing in that value. Gold does not. When I buy gold, it just sits there and looks back at me. Now sure, there is some value with gold, like you can use gold in dentistry, you can use gold as jewelry, but for the most part, when somebody buys gold, it's sitting there in a vault versus these companies are actually working to produce value. And because of that, traditionally, this was considered an investment. This was considered a hedge against something bad happening, a recession, inflation, some sort of bad economic thing. This was protection against that. But now investors, including some very wealthy ones, are starting to look at this like an investment. Take a look at what BlackRock is saying as well. BlackRock is saying gold is now a real investment, not just a hedge. Things that generally cause the price of gold to go up include things like number one, printing more money. Number two, lowering interest rates. Number three, increasing national debt. And number four, having worries about the United States dollar. And the reason why is because all four of these things can contribute to inflation. And when people are concerned about inflation, that means they're concerned about their currency. And when people are concerned about their currency, they want something more safe and stable, like a hedge. And that hedge has oftentimes historically been physical gold. But now things are starting to change, which I want to show you. And again, this is one of the reasons why on August 12th, 2025, I am hosting my biggest investor workshop of the year, where I'm going to be going over how you can invest your money in this changing economy through a Trump presidency, through the geopolitical tensions, and through all the technology and AI shifts that we're seeing. This is a free workshop. I'm doing it twice on August 12th, once in the morning at 10:30 a.m. Eastern Time, and again in the evening at 8 p.m. Eastern Time. And in this workshop, I'm going to be going over how you can invest your money to hopefully get better returns. We have hit capacity every single time we've done this workshop, so if you'd like to join, all I ask is that you register soon, and I have the link for you down in the description below. Now, when it comes to investors looking at gold as an investment now, I'm going to reference BlackRock. And you don't have to like BlackRock or love them, but they are the largest asset manager in the world, and there are things that we can learn from them. This is directly from insights that BlackRock published. Historically, higher real rates and a strong United States dollar have served as headwinds for gold, and that we've already established. When you have low interest rates, that can contribute to more inflation, which means people are more interested in gold. When you have worries about the dollar, that can have more people wanting to buy gold as protection. But BlackRock is saying right now we have higher interest rates and a stronger United States dollar, which means in theory people shouldn't be buying as much gold. But that's not what we're seeing happen. Recently, the price of gold has continued to advance despite these factors, with support stemming from central bank purchases and growing United States deficits. So BlackRock is saying that more investors are turning to gold because we have concerns about this national debt problem that we have in the United States. And then number five, and this number five is central banks around the world buying up more gold. Now, interestingly, we saw central banks around the world start to buy gold after the pandemic, and it looks like that trend is still happening today in 2025, all while the United States national debt is also still rising. And this is why BlackRock says more investors are turning to gold, because traditionally when investors around the world, we're talking about countries, we're talking about corporations, we're talking about wealthy individuals and institutions, not just in the United States, but globally. When these institutions wanted to park their money into a safe asset, the place where they would park their money had often been U.S. Treasuries. A United States Treasury means that you lend money to the United States, and this historically has been considered a risk-free investment. That's what every economics textbook will tell you, because the United States government always has the ability to pay their bills. And so now when you lend your money to the United States government, they will pay you back interest. And this has been happening. And yeah, the United States government can always pay their bills because number one, they can just raise their taxes, or number two, they can work with the Federal Reserve Bank, the central bank, to print more money. So the concern that BlackRock is essentially alluding to isn't that investors are concerned about the United States government paying back your interest. It's that the money you're getting paid back in interest will be losing value because of this inflation. Because if the United States government keeps racking up their national debt and then have to print more money to pay back that interest, that the value of the dollars that you're getting paid in interest will be diluted. And so now you have central banks around the world and these institutional investors around the world that are buying up more gold. Not to mention the fact that some central banks around the world are also buying up gold to strengthen their currencies to potentially be able to compete with and separate themselves from the United States dollar. And that's why BlackRock is saying in this environment, gold is less likely to act as a hedge to equities, but rather as a long-term store of value. In other words, going back to what I said in the beginning of this video, BlackRock says that gold is more like an investment as opposed to just being a hedge, which is kind of a strange concept because, well, that gold that you're buying is just sitting there in a vault, not doing anything, versus actual equities, meaning investments, stocks, are working to produce value. So an interesting situation. Now, in case you're wondering how could you actually get exposure to gold, let's go over that, but I gotta give you a disclaimer. Number one, I am just a random guy on YouTube. I am not a financial advisor. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube, okay? Number two, full disclaimer, I have been buying physical gold since before it was popular during the pandemic. It makes up about 2% of my total portfolio because I still look at gold as a hedge more than an investment for myself. I don't really monitor the price of gold. I just buy a little bit of it every single month because to me, it looks like a way of saving hard physical money as opposed to a real investment. My perspective, but now let's break this down. I'm gonna go over 3 ways that you can get exposure to gold. Number one is you can go out and buy physical gold. That means you can buy physical gold coins, you can buy physical gold bars, and yes, you can go to an actual dealer to buy this physical gold, or there's a lot of easier ways to do that online where there are platforms on the internet that will allow you to buy fractional shares of gold, and then when you buy enough gold to make up a gold bar or a gold coin, they will then ship that physical gold out to you. Now, you don't wanna just store that gold somewhere where, it can be easily found or seen. You want to store that somewhere safe. Some people say store it in a bank vault. Other people say don't store your physical gold in a bank because now if that bank were to shut down, you could lose access to the gold. So people will store it in private vaults. You got to figure out what's the right way to store that physical gold. But if you are actually buying that physical gold, you want a place to store it. The second way that you can get exposure to gold is to buy a gold ETF. So you can go onto the stock market and buy an ETF that gives you exposure to physical gold. For example, GLD. Again, I'm not recommending this ETF. GLD is an ETF that gives you exposure to that physical gold. So it's a paper contract that says you own some physical gold. And then the third option is to invest in gold mining stocks. These are companies that are involved in the business of going out and actually mining that physical gold. And as gold prices go up, the things that they're actually mining now become more valuable. So in theory, they should be able to make more money. So multiple different ways to get exposure to gold. You have to find what's right for you. Me personally, again, I don't recommend what I do to anybody else. For me personally, I like the physical gold option because if I want to own an asset, I want to own the actual asset because to me, that's the way that I want to do it. It's kind of like the difference between owning the actual Bitcoin versus owning a Bitcoin ETF. If I want to own the asset, I want to own the asset less than a contract or a derivative of that asset. But that's just me. There's a lot of very sophisticated financial people out there that have found ways to make money off of everything else, but I'm simple. You got to find what's right for you. But I do want to give you one piece of caution. Gold prices, like every other asset, don't go straight up. If we take a look at gold prices after the 2008 crash, you saw the gold prices boom until around 2012. And then in 2012, after that, the economy started to recover and gold prices fell. And we did not see gold prices break new highs until around the pandemic time. So between 2012 and 2020, gold prices were actually in a slump. So I know it's exciting to get caught up in the headlines, but it's important for you as a savvy investor to understand why you are making an investment and not to chase hype, because there are a lot of people that are getting into things like gold because they think that it's the next hot thing like Nvidia or Tesla and that it's going to go straight to the moon. And sure, yeah, there is a chance that gold can go up, but understand the actual value of the underlying asset. That's what fundamental investors do, is they want to know, is there actual value in the underlying asset, as opposed to just chasing hype. Because when you just chase hype, then things can go up very quickly. It builds a bubble, the bubble bursts, and then the people that are holding on to the bubble, well, now they're the ones that are losing money. Now, I'm not saying that gold prices are going to crash tomorrow, but I want you to understand the way that markets work. Things go up, things go down. Sometimes things go up way too fast. Sometimes things go down way too fast. Over the long term, we've seen gold go up, but you have to know the game that you're playing, and you have to understand the risks that are associated with that as well, and then make sure that that risk fits into your portfolio properly. And with that, if you are an investor, again, I look forward to hosting you on August 12th on my workshop, and I have the link for you to join down in the description. America is entering a death spiral.
When debts rise relative to incomes on a chronic basis, right now for the U.S. government, it's almost $1 trillion a year that goes to interest payments. When you run a large deficit, you have to sell debt to do that. And when I calculate it, the quantity of debt to be sold is much